Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Accession Properties Realty Trust. And trust me, it's more exciting than watching paint dry, especially if that paint is covering up some potentially troubling financial cracks. This report is an 8K, a snapshot of important events that the company wants investors to know about right now. This time it's about their investor presentation released in June of 2025. We're going to look at what they're telling investors and see if the story adds up. And before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. So Accession Properties Realty Trust, who are these guys? They're a real estate investment trust, or REIT. Basically, they own a bunch of properties and lease them out to businesses collecting rent. Think of them as landlords for restaurants, car washes, and other service-oriented companies. The main event here is the release of their investor presentation. Companies use these presentations to woo potential investors, painting a rosy picture of their prospects. Let's see what Accession Properties is highlighting. The company put out a presentation for investors. It's attached as an exhibit to this report. The important thing to note here is that they are furnishing this information, not filing it. What does that even mean? Legally, it means they're sharing it, but they're not necessarily standing behind every single statement with the same level of legal certainty as if they had formally filed it. Think of it like posting something on social media versus signing a legal document. Same information, different levels of commitment. Now let's dive into the presentation itself. We don't have the full presentation here, but we can assume it covers the usual things REITs like to talk about: growth in revenue, occupancy rates, meaning how many of their properties are being rented out, and overall financial health. They're trying to convince investors that they're a safe and profitable place to put their money. Here is where it gets tricky. Presentations can be very polished, but it's up to us to look beyond the surface and ask tough questions. I wish we had access to the actual investor presentation to do a deeper dive, but it's not included in a passable format within this 8K filing, so it is difficult to extract information and check the validity and claims from the presentation. This section simply lists the exhibit attached to the report, which is the investor presentation. It's a standard part of the 8K filing. Let's talk about some of the things that might be lurking beneath the surface of a REIT's presentation. One thing to watch out for is the occupancy rate. A high occupancy rate is good, but is it sustainable? Are they offering big discounts to attract tenants, which could hurt profits down the road? Also, what types of tenants are they attracting? A diverse tenant base is better than relying on just a few big companies, because if one of those big companies goes bankrupt, it can leave a huge hole in their rental income. Another key metric is funds from operations, or FFO. This is a special measure REITs use to show their profitability. It basically adds back depreciation expense, which is a non-cash charge, to get a better sense of their cash flow. But even FFO can be manipulated. Are they counting one-time gains as part of their FFO, making their performance look better than it really is? Finally, let's talk about debt. REITs often carry a lot of debt to finance their property acquisitions. That debt can magnify their returns when things are going well, but it can also sink them if the economy turns sour and tenants start having trouble paying rent. Without the investor presentation numbers, it's impossible to make an educated judgment about the company's trajectory. This is just the formal end of the report, signed by Marky Patton, the Executive Vice President, Chief Financial Officer, Treasurer and Corporate Secretary, confirming that the information is accurate to the best of their knowledge. So what's the takeaway here? Accession Properties Realty Trust is putting on its best face for investors, as any company would do. But it's up to investors to do their own homework, look beyond the pretty pictures and catchy phrases, and dig into the underlying numbers to see if the story really holds up. Without the ability to review the actual numbers in the investor presentation, it's really difficult to analyze their claims and how Accession Properties Realty Trust is actually performing. Investors should carefully evaluate the occupancy rates, tenant diversification, FFO calculations, and debt levels to get a true sense of the company's financial health. Alright, that's our decoding of Accession Properties Realty Trust latest filing. What's your take on REITs in general? Are they a good investment in today's market? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Don't forget to check out the Discord in the description. Thanks for watching, and I'll see you in the next video.